been doing this. I did it one. I did it 2 times.
Why you gotta tilt?
Because it gives you an angle. You can see the whole thing. If I keep it straight,
It's like this, bro.
that's right. That's right. If I tilt the other way, you miss the top. I want to have your whole. See, you got the top of it.
So we're gonna do the whole show like this?
Lean, man. Hey, put the lean on it. How they say put the
Like
lean
you
on
on
it?
the slip, slide the slip. Why I'm getting all this feedback, man?
It's real
We
loud.
have plenty of time to do this, man.
I could eliminate it if I turn this down.
No, don't turn it down. Don't turn it down. We just get ready. Don't turn it down. Don't turn it down. We just get ready. Man. Why come out here, man? Like, ooh, I got to calm down. Ooh. Ooh. Love this one here, boy. I love it. I love it. I love it. I love it. Love it. Love it, man. Love it. Man. Good evening, good evening, good evening, good evening, good evening. This is your host, Joaquin Thompson, coming to you live from Lilburn.
Lilburn.
Man, we still get a lot of feedback.
Oh, yeah, go ahead.
Lilburn, we're getting closer to Atlanta. We moved down.
We
moved down from Snellville.
Got
We headed down Stone Mountain Highway,
a view.
headed back towards Atlanta, and we're getting closer. We're closer than we were, and it's great to be here again. Thursday evening, got a great view, and really excited about the show.
Yes, sir.
And for everyone who's joining for the first time, this is a show that's about personal finance, and it's personal finance from a spiritual perspective. We don't do we don't do we don't do religion. We don't do what is that?
That's you.
No, that ain't me. Is it?
Doing all this.
Oh, I don't know, man. That ain't me. It might go viral. But we don't do religion on our show. We like to keep everything very efficient. And from that standpoint, what we mean by keeping it efficient is making sure that when we talk about spirituality on our show, we just talk about one thing, that's God. So we don't do religion, we don't do all the different sects and all the different, because everybody have different beliefs, everybody have different ways that they were raised, we get it. So what we like to do is keep it spiritual, so that way at least we have a foundation. Because anything that you do is going to need a strong foundation, and that way we're not just haphazardly doing things, talking about things, so that way we're centered in our core from an integrity standpoint, and making sure that we're giving out information that's going to be useful to everybody that listens. Takes time out their busy day on Thursday, sitting back, got their paper and pencil and pen, and just sitting down taking some notes. We want to make sure that we're giving out the best information that we can give. So kudos out to all of you all. And before I get started, a couple things has been on my mind. Couple things. And my producer reached over here. I was going to grab something, but he reached over, and I was like, why do you have on that watch?
Oh, did you see it?
Did I see it?
Oh man, you want one, don't you?
Did I see it? Bro, we going into week 3, man. Y'all ain't won a game.
No,
We going into week 3.
We started off with
1, 2, we going to third week.
Mm-hmm.
Pittsburgh ain't won a game.
Monday night.
Pittsburgh, what, next Monday?
Monday coming.
That's week 4.
No.
So y'all gotta put,
We play Monday night. We do Monday night game. They like to put the Super
man, y'all
Bowl
gonna
on
get
Monday night.
destroyed Monday night.
Against who? I wish we played Jacksonville.
No, you better watch what you wish for, boy. You don't wish you played Jacksonville. If you don't believe me, call Tom Brady and ask him. Tom Brady don't wish he played Jacksonville. He went down there all that got early. Them jokers said, gloop. Tom Brady said he couldn't sleep. He kept waking up. His wife said, why you keep waking up? He said, I don't know. Every time I go to sleep, every time I close my eyes, I just keep hearing, Duma.
No, man.
Why said he was having nightmares when he got back home. She was like, baby, what's wrong with you? He's like, I don't know. I can't. Every time I close my eyes, Yeah, that's what happened, man. When you, hey,
They put it on
when you
it.
start, hey, boy, did they?
They put it on it. They put it on it.
Wait a minute, hey, we just getting started. We just getting started. I tried to tell you that last year, man. It's like, hey, bro, this is gonna be real serious. But tonight's show, very, very. This is gonna be part 2. So I've been in a very good teaching mode, and I want to make sure that I'm gonna flip the show. So what I'm gonna do is I'm gonna talk about the books of the week in the beginning of the show, and then if I have time, and because sometimes when I get on the roll, I forget like how to do the book of the week. But it's very important for everybody to capture the book of the week, because the book of the week is something that's going to help you. Even if you say, well, hey, I need the book of the week is put in place so that way you have a resource to find out the information that I'm talking about. So you don't just use the Daily Bread Radio Show as your only resource, but you're able to go out, research, find these different books by these different authors, and then utilize that information to improve the way that you look at personal finance. Because today is part 2 of what we call You Incorporated or Household Incorporated. So if you're a single person, it's You Incorporated. But if you're in a family, or if it's you and a significant other, then it's Household Incorporated. And even if it's just one person, it can still be Household Incorporated, but I want to make sure that I'm sensitive to everyone and everyone's situation. But either way, it's You Incorporated. So as you're going through your day, as you're working, as you're looking at different things, making different decisions about what to buy, what not to buy, how to do it, how not to do it, everything. And I mean, and let me get, did you put the calling number in the chat?
I did.
Well, why you scrolling looking at others? Hey man, don't scroll and look at nothing else, man, while I'm on the show.
Okay.
All right, so I don't need you scrolling through
Sure.
Facebook, man. I need you to focus, man.
Absolutely.
How you gonna have the #1 show you eat? See, that's what's wrong with Pittsburgh, man. Y'all wasn't got there focus. Y'all scrolling through. Y'all texting and screaming. Y'all, they said we don't need Le'Veon Bell. Yes, y'all do.
Yes, we do, bro.
Le'Veon Bell started a domino effect. He said, nah, we don't need him. He don't want to come to camp. He turned out 14 million. Look what's happening right now.
Man.
Y'all have lost more than 14 million in 3 weeks. When y'all could have paid that man, y'all definitely would have beat the brakes off of Cleveland week 1.
Yep.
Y'all definitely would have won last. Y'all wouldn't even need the kicker last week if y'all had Le'Veon Bell.
I believe it.
You would not have needed. You wouldn't even needed the kicker
I believe
if
that.
you had him in place. But y'all trying to be too. And see, that's what you have to think about. Everything's about personal finance. Food that you eat, car that you drive, clothes that you wear, schools that you go to. Everything that you do is tied to personal finance. So if everything that you do is tied to personal finance, the thing that you have to keep in mind is this. If you're going to be a good CEO over the blessing that God has given to you, how you going to be a good CEO and you're not studying? How you going to do that? That's like being a teacher. That's like somebody putting you at the head of the class to teach English or math or science, and you don't know the subject matter. So here's the thing. Here's a term that I found. I was doing some research about the stock market. They said 70% of the people. No, I think it was like more like 75 or 73. So we're gonna just say 70. I'm gonna give you the benefit of the doubt. 70% of the people that have money invested in the stock market are what they call, and this is in the equation for the people that make money in the stock market. 70% of the people are labeled as, listen to this term, willing losers. Willing losers. And you might be scratching your head like, what's a willing loser? Willing loser is a person that's putting money into the stock market and have no idea whether they're going to make money or not. They have no idea. People put money in 401ks and don't realize that just having the money come out your check, that's just step 1. That don't mean that you're investing in the right product. It's all, your company might have 30 different plans that you can invest in your 401k. Some might be bonds, some might be stocks, some might be blue chip stocks, some might be small cap stock, some might be a hybrid between bonds and stocks. Some might be real estate investment trust. If you just take the money out your check and say, oh, I'm investing in my 401k, but then you never take the time to figure out how much money am I making year to date? How much interest have I earned on this account year to date? This is September. We're in the last month of the third quarter. We're getting going to the fourth quarter. October, November, December. That's it. 2018 is over. 2018 is over. So, as the CEO of You Incorporated and of Household Incorporated, it's extremely critical and important for you to take some time out and learn the keys of personal finance. I didn't say you have to go and get a finance degree. I get it. Some people just not into finance. Like, hey, I'm into yoga. Okay, you could be into yoga. But if you're going to open up a yoga studio and have people coming into your studio and pay you to be an instructor in the studio, you're going to have to learn how to be a good steward and CEO of You Incorporated. And you might say, well, I'm not going to have a business. I'm not going to be an entrepreneur. I've been working on my job for 20 years. I plan to work another 10 years, and then I'm going to retire. Perfect. Not going to be an entrepreneur. Got it. Don't have no desire to be an entrepreneur. Check. I get it. But here's the thing. When you get your income that comes in the form of a paycheck every week, every other week, every 30 days, if you're not taking the time out to be a CEO, Chief Executive Officer of your own money, guess what's going to happen? You are going to become a willing loser. And just like I just told you, if you're not keeping track of your money, somebody else is keeping track of your money for you in the form of, hey, I'll take it into my business. Hey, I'll take it into my investment. Hey, I'll take it into my fees, because you're not paying attention to the fees that they're charging you for the money that you're investing in your 401k. You can go back and look at your 401k. You might have been losing a percentage point every year over 10 or 15 years because you don't know what you invested in. So tonight is part 2 of Household Incorporated. And I had my aunt on the show maybe 3 or 4 weeks ago, and she coined the phrase perfectly. And I think that's something that we also have to look at as we're looking at personal finance. And you have to ask yourself the question, is my house in order? That statement alone is like, what? Is my house in order? And if I'm talking to the listener audience, is your house in order? And you might, and I want to be plain. I want to make this real plain. When I say, is your house in order, you cannot produce income and trade time for money, because now we're talking about linear income. You can't trade time for money and then expect to get time back, because time doesn't come back. There's no return on time. Time, when you use it, is gone, right? Time is gone. 86, 87, 88, 89, 91, 95, 98, 2000, 2001, 15, 12, 13, 2018. We only got 3 months left. So whatever you've done in 2018 and whatever you haven't done in 2018, guess what? You can't get that time back. So the plan is, to be successful and become a good steward of whatever you have, because most times people say, I don't make enough, I need more. It's not that you need more. We all need more, right? I get it. Like, I want to make more money. But it's not that you need more. What we need to do is become more financially astute or build our business acumen to know that when we get $1, $1 can change whether or not you become more rich on your way to being wealthy, or if you're getting poor on your way to becoming more poor. Just $1. What you decide to do with each one of those individual dollars, because they should be working for you. But if you don't have a plan for your money, if you get paid tomorrow, Friday, if you get paid on Friday and you just, oh man, I'm gonna do this, I'm gonna do that, If you don't know today, if you don't have a plan today, which is Thursday, for the money that you're going to get tomorrow, and the money that you're going to get 2 weeks from tomorrow, and every 2 weeks thereafter, or whatever the interval is that you get paid, you're in trouble. You're in trouble. So we're going to backtrack. Last week's show, I talked about the importance of understanding an income statement. Some people are like scratching their head, like, what's an income statement? Some people call it a profit and loss statement. Well, I don't have a business. Yes, you do. You're your own business. You are your business, right? The number to the station, 678-381-1973. 678-381-1973. 678-381-1973. That's the number you could call in. You can have a question, you got a concern, if you just want to say, hey, just want to shout you out, let you know you're doing great. Whatever you want to say, just call, give us a call. We're here in the studio. We'll be here until 9 p.m. But going back to that, you are your own CEO. So last week we talked about income statement. So we're going to do a brief recap. Income statement. You hear people talking about in business, your top line. Most people hear about top line and bottom line. But many times people don't know what they mean by top line. Everybody understands the bottom line, because the bottom line is the bottom line, right? Even if you don't understand business, you understand when somebody says the bottom line is you can't stay here no more. Oh, you understand that, right? The bottom line is you can't work here no more. Gotta go, right? So you don't have to, but you need to start learning about the top line, right? Because the top line refers to the top line in an income statement, or some people call it profit and loss statement. And you can Google that. That's what I advised you to do last week. Just do a Google on income statement or profit and loss statement, and then just click on images, and it'll show you what it is. So top line, that's your income. In business, top line is your revenue or your sales. So if you're not in business, then top line would be your income. Then what we say, we got 2 steps that we put in our income. What's those 2 steps? First one, we said tithing. We gave a whole, we had a whole conversation about tithing, so we're not going to go into that tonight. You got tithing, and then the second step is what? You got to start getting in the habit of paying you. So that's the second step. 10% to tithing, 10% to you. Now you got 80% left, right? That's your gross income. And we said that's real gross. That's not, if you don't take those first 2 steps, when you get to your gross income, that's just not where you need to be. But not so much your gross, so I don't want to confuse you all. Let's just rewind, because I know people go, that ain't gross. I get it, because we talked about gross and net last week too. But just keep in mind, you have to do those first 2 steps. Whatever your income is, take out your tithes. So you make $1,000, let's keep it real easy. You make $1,000 in your paycheck, $100 is going to be in your tithes, right? $100 is going to you. You left with $800. Of that $800, the next step is, the third step is what? Start taking out your expenses, right? So you got your car note, you got daycare, you got insurance, you got food, you got to pay the light bill, the water bill, the cable bill, the cell phone bill, the Visa, the MasterCard, American Express, the bill. You do all of them till you get to the bottom, right? So once you take out all of the expenses, when you get to the bottom, out of that $800, when you get to the bottom, you're going to have a number that's left. It's going to either be a negative number or it's going to be positive. It's very important for you to do this exercise, because you will be amazed at how much you will learn just doing this exercise. Not only because you may say, well, I know I'm positive. You might be positive, but how positive are you? You could be $1 or you could be $300. Now what is that? If you have a surplus, right, you get to the bottom and you positive, so you got $300 left. Okay, what's the plan for the 300? Are you going to start to eliminate some of that debt and increase your cash flow, eliminate some of those expenses? Or if you get to the bottom and you negative 300, and we talked about that. So if you negative 300, are you going to go back and take 300 out of the tithe or stop tithing? Or are you going to go back and stop paying yourself? Which one? Because either one of those is, God is first, always going to be first. It's God, then you. So You got to keep that in place, and we have to get in the habit of doing that so that we eat. And if you are negative, then what you do is you have to look at your expenses and find ways to eliminate things in the expense column. Because as you eliminate expenses, your cash flow grows. Your cash flow increases. And this is not even dealing with no business. This is Household Incorporated. You incorporated. You the CEO, you got the money coming in, your paycheck. Just have a plan for it. Tell it what to do, where you want it to go. You go over there, you do this, you do that, you have to become a good steward of the income that you have, because it's not about how much you make, it's how much you keep. It's how much you keep. It's people out here that have, I would say $30,000 a year jobs, $40,000 a year jobs, $50,000 a year job, and they have more assets, they have more cash flow than people that make $1 million. Because if you make $1 million, right, and don't tithe, and don't put money to yourself, and you still end up, if you have $1,001 in expenses, you broke. You dusted. You dusted. So it doesn't matter how much you make, which making more always helps. I mean, I get that. But it's all about what you do with what you make, especially over long periods of time. It's all about what you do with what you make. So last week, that's a recap on the income statement. This week, I wanted to talk to you all about the second important sheet, I guess you would say worksheet, right? Or business statement that you need to be familiar with, and that's called a balance sheet, right? So for those of us that are in the business world, we understand balance sheets, right? People that are not in the business world, hey, I just want to run my yoga studio. I get it, but you need to understand what a balance sheet is. What is a balance sheet? Just like what the word says, balance. So just knowing that, it's like, well, I know that from Harbor View, being on the seesaw. Right? If you get on the seesaw, and then I had a little chubby partner, he get on the other end, I'm going up. It ain't balanced. But I got to get on the seesaw, and my friend got to get on where we even, right? We even. My feet not up in the air, or I ain't sitting down on the ground. You have to be balanced. So what's a balance sheet? The formula for a balance sheet is this. Assets. This is very important. Assets equal liabilities plus owner equity. And I know business people, they get it, they're like, oh, that's business 101, I know that from, I get it, but it's a lot of people in the world that they don't understand that. Like, what? That's like Greek to them. What does that mean? That means this: assets equal liabilities plus owner equity. Okay, what does that mean? Here's a simple one, right? Simple. I'm gonna give you the simple version so you can get it. Own a house. The house is $100,000. You got a $100,000 mortgage, right? Well, the house costs $100,000. Or let's do it a different way. The house is worth $100,000. It's an asset, right? Your asset, and not to get it twisted. So this is just an example, because I'm gonna give you the disclaimer about an asset in a few minutes. But you have a house and it's worth, the equity in the house is, just say the house is worth $100,000. But the liability is what? How much do you owe on the house, right? The asset equals, the liability is, you got 100, the house is worth 100, you have a $50,000 mortgage, right? Okay, got a $50,000 mortgage. How much is the owner equity? The owner equity is what? 50, right? It's worth 100, you owe 50, plus liability, plus owner equity. That's a real simple version, right? But we're gonna take the owner equity piece off for tonight's conversation, because what I wanna talk about tonight is assets and liabilities. Now, I just used the house, but one of the things that you'll learn from Cash Flow 101, this game, I'm gonna talk more about this game in a minute as well, and from reading the book Rich Dad, Poor Dad, And he makes a very, very important point in this book, which is this: a house is not an asset. And that's something that we've been taught. So that's why I say as a CEO, you have to understand the difference between an asset and a liability. So some people say, yes, it is. I can hear you through the phone. You ain't called up here, 678-381-1973. A lot of people say, yes, it is. My house worth $200,000, and I only owe $100, and I got $100,000 worth of equity. It is an asset. Okay. So the question that I would ask to you is this: if your house is an asset, right? How much money do you have coming in from your house every month? How much income, right? That's the difference. That's the difference that Robert Kiyosaki made in his book Rich Dad Poor Dad, that I think a lot of people didn't take to heart. But once I read it, and I had to change the way that I looked at things. I was even thinking like, oh man, that's an asset, man. I still got to pay on my house, but as I pay my house down, it's an asset. Nah, that's trickery. Because if you go into, say if you go in to get a loan, do you have a house? You be like, yeah, I got a house. How much did you owe? Oh, I only owe 50 on it. How much is it worth? It's worth 100. Oh yeah, that's an asset because you have $50,000. No, it's not, because I don't make no money from my house. I pay. Everything on my house is outflow. I pay a mortgage every month. So I'm paying my, $1,000 a month. So how can you be paying $1,000 a month on something? If you paying on something, that's a liability. Let's just keep it real simple. If you're paying on something, it's a liability. If you pay money out, it's a liability. I don't care what you want I don't care what it is, house, car. They even, if you go get a loan, they'll ask you, do you have any cars? Yeah, I got a car. It's paid off, it's an asset, okay. It ain't really an asset because what? It's not making you income. It's not an asset. It would be an asset if your car is paid off and say you an Uber driver, okay, you make some income from your car. Or you rent your car to somebody and they paying you to use your car, okay, now it's an asset. Because somebody's paying you for the use of your car. That's an asset. You making money with that. That's an asset. But if you pay it out, that's a liability. Two different things. Asset, liability. So assets are things that's going to pay you money. The reason the asset and the balance sheet is important because we said what? Assets equal, liabilities plus owner equity. So we're going to drop the owner equity part right now and just talk about assets and liabilities. Assets are things that we have to develop, we have to create in order for us to progress in becoming more astute, business-minded. Some people call it rich and some people call it becoming wealthy. You have to accumulate assets. You have to accumulate things like real estate, where you have a tenant and the tenant is paying you rent on the asset. That's an asset. If you got a triplex and everybody paying you rent, that's an asset. You got money coming in from that, that's an asset. Every month they paying like clockwork. That's an asset. So now you flip it. Like, oh, I got some stock. Okay. Talking to a friend of mine, I see you on, Tony. We was talking about that last. Tony said, hey, I'm gonna buy some stock. Okay, you buy the stock. If the stock is paying a dividend every quarter, like, hey, we outpaced our earnings, we paying a dividend, that's an asset because the money is coming to you. It ain't going out, it's coming to you. So if you're trying to remember, like, is this an asset or a liability? Just think about it. Like, am I making money or am I paying out? If you're making money, it's an asset. If you're paying out, it's a liability. Bottom line. So let's look at, when you look at your balance sheet. So what you have to do now, the second part, last week I hope you did your income statement, but if you haven't done your income statement, take some time out and do one this week. Because that would be the first step in getting you going into a direction that you want to go. As far as some people call it being financially free, I just call it being fiscally responsible, right? Being a good CEO of whatever you get coming in, be a good steward of that. The second part is understanding the balance sheet. Because once you get to the point where you understand the balance sheet and you start to accumulate assets, a I'm buying stock, so to get a dividend, and the dividend that is paying me, I'm going to buy more stock. Okay, that's an asset. Okay, I'm gonna buy some real estate. I'm gonna buy a single family house, and then I'm gonna take the single family house and I'm gonna make it into a group home. That's an asset, because now you're gonna have a group home. Group home is hopefully being profitable, making you money. It's an asset. Now I'm gonna buy a little small, I'm gonna buy a quad. I'm gonna buy a quad, and I'm gonna put 4 tenants in it, and the 4 tenants are gonna pay me $150 a month. Hopefully they pay you more than that. I just had to see if y'all was listening. Y'all, people like just nod and be like, yeah. No, they gonna pay you more than $150. Just say $500. They gonna all pay you $500 a month. But you got 4 tenants. They paying you $2,000, right? Your mortgage is say $700. Okay, you cash flowing. It's an asset. It's money coming to you, right? So those are the type of things that you want to start to accumulate. The things that you want to get rid of, because most people that you know, I know, me included, we've been conditioned to accumulate what? Liabilities. Liabilities. The fresh new rod with the rims. Like, oh yeah, that's funky. But the thing that's not funky is that car costs $40,000 plus interest that you paying to somebody else. You pay that to the bank, right? So you paying your car note to the bank $400 a month, $500 a month, $600 a month, $700 a month, $800 a month, $900. Some people pay $1,000 a month for their car, but they got they got the funky new S5. Oh, okay, yeah, you right. 2019. This ain't okay. I get it. But if you paying $500 a month in a car note, and that's going to the bank, on the bank's book, guess what it is on the bank's book? You are an asset to the bank. Why? Because they got money coming in from you. So every time you go and pay, when you go and pay your car note, it's another little, it's like it's a little hand that is all shriveled up, and it's pulling your money in like, yeah, I appreciate it. It's an asset. It's just like, like we get close to home with a little grip. So I'm like, so once you change your mindset, student loan, liability. House, liability. Car, liability. Watch, Rolex, any kind of watch, liability.
Still watch.
Right? Steelers watch, that's a huge liability because y'all ain't won a game yet. So if you buy a Pittsburgh Steelers, if you buy anything Pittsburgh Steelers right now, that's a liability because y'all ain't won a game yet. We've been doing this. We going into week 3. Some people undefeated. There's a couple undefeated teams in the league.
Jacksonville undefeated.
Dude, I told you Tom Brady's like, I cannot get to sleep. But so that's a liability, right? All those are liabilities. What else did I have on my list? Credit cards, liability, right? We talked about car loans, student loans, mortgage, all those are liabilities. So you may be asking yourself, what if I want to invest in a company? What if I want to start me a small business? I want to start me a cleaning service. I'm gonna, buy me a truck, and I'm gonna use the truck to go and start cleaning buildings. Once you start getting money from the business is an asset. Why is the business an asset? Because you're making money coming from it. Why else is the business an asset? You can get your business to a point where you sell it to somebody else, and they're gonna give you more money, right, for the business. That's an asset. So as you're working as the CEO, you got your income statement, you got your balance sheet. The balance sheet, when you think about assets, when you make money from an asset, where does that money go to? It goes up to the top, which is what? Your income statement. Now at your top line, instead of you just having your payroll up there, right? Because you had your payroll up there, you was making $1,000. Now you make $200 on your, just say you got a little apartment complex and you cash flowing, say another $1,000, right? We gonna say $1,000. You brought you a little duplex, you cash flowing $1,000. Okay, cool. So now you had your income up there at $1,000. Now that asset is bringing another $1,000 to your top line. So what is that gonna do? That extra $1,000 on your top line is gonna increase what? Where else are you gonna see it at? In your cash flow. Because hopefully your expenses haven't increased that much. Yeah, you're gonna have some expenses with your property, but guess what? Your property should be taken care of itself, so that way, whatever your tenants are paying you exceeds your expenses for the property, mortgage included. It becomes income on your top line. Now your top line is coming down. You got your expenses. Your cash flow is going up. It's going up. Let's look at the other side of that equation. Liabilities. If you keep buying liabilities, like you already got one car, and you say, you know what, man, I'm gonna treat myself. January, I'm gonna buy me another car. You buy another car, guess what? You just added $500 to your expense column.
Yeah.
You ain't had no income, so you got the same $800 that we talked about, because you was making 1,000, gave 100 to the church in the tithe, form of a tithe. You gave 100 to yourself, so you left with 800. Now you come in and buy a new car with a new car note, right? Put that on top of your expenses. Now you got $500 less in your cash flow. Uh-oh, we got a caller. Calling you on the air. This is Joaquin with the Daily Bread Radio Show. What's your name and where you calling from?
This is Juanita.
Hey, Juanita, how you doing today?
I'm good. How are you?
Oh, I'm doing excellent. I'm doing excellent. What can we do for you this evening?
I just wanted to talk to my brother Raheem.
Oh, okay.
Is he around?
So I call him.
Raheem said he'll call you back.
Okay.
All right. Okay.
I'll come later then.
All right. Thank you, Juanita.
Thank you. Bye-bye.
Bye-bye.
Yeah, you know I'm a celebrity, this. I'm a celebrity, boy. Go ahead now.
Celebrity.
Go ahead now. When we come on screen, look.
Let me tell you something, man. Let me tell you something. I'm respectful to everybody, but don't have Juanita calling up here on my show. When she see that, you see this thing? It say Gorilla Publishing and Daily Bread Radio. This don't say Raheem's Emporium. This don't say Raheem.
Look at him. See,
And what's he calling up here on my show for?
Yeah, I've been quiet all day.
What you been calling up here for? You been quiet? Why you ain't calling?
I've been quiet all day. I said I'm gonna be quiet. I ain't gonna say that. See,
You can't. What can you say?
Look, you trying to pull me. See,
Okay.
You're trying to
So
pull me.
tomorrow Tanya gonna call. I'm gonna have Tanya call in on the Morning Glow.
There you go.
Like, hey, I just want to call in. Is Joaquin there? And you were like, babe, I'm doing the Morning Glow with it. I don't know where he at, right? Is he around? I'm like, I look right at you and said, no.
Nope.
It was like when you was a shorty, right? Your friends would call and say, hey, can I speak to him? Like,
Nope.
no. He on punishment. So you definitely on punishment. She like, Juanita said, okay. But anyway, not to digress. But that $500 on that new car that you purchased, that's going into your expenses. So what does that mean? That means that if you were cash flowing $300, like we gave the example earlier, say you was already cash flowing $300, right? You had a $300 surplus. You add $500 to your expense. Where you at now? Where you at now? You negative 200. You had a $300 surplus. You added in 500.
Come on.
Now you negative 200. And how long are you gonna be negative 200? A long time, depending on how long did you sign that car note for? 3 years? 4 years? 5? 6? I heard they doing 8 years now.
It's too long.
You doing 8 years to buy a car? 8 years. 7 years. So you just made one decision that you're gonna have to pay for 7 years plus interest. That's the part that plus interest. And all of that hits your expense column. So you gotta know how your assets, your liabilities work with your income and your expenses.
Yeah, right.
It's real simple. Income, expenses equals cash flow. The bottom line. What's the bottom line? But here's the thing. Most people that I talk to, when I'm talking to them about this, they never taken the time to sit down and do an income statement or a profit and loss statement. So what they do is, the way that goes is, when you get paid tomorrow, you don't know if you up or down, right? You don't know if you up or down, and you making decisions on things that are liabilities and you could already be negative. Or you could be positive. But once you make that decision to add on another liability that turns into an expense, now you're negative. Now you went from winning to losing. Now you trying to dig out, but it's gonna take you more time to dig out because you just added on a liability when you're trying to release liabilities. You're trying to pay off credit cards. You're trying to pay off car loans. You're trying to pay off student loans. So that way you can free up money. When you free your money up, what you gonna do with the surplus? Buy an asset, and that asset is gonna create money to take you back to the top. That's it. That's the game. I'm giving you the game. You can just take that, just that alone. I'm not even talking about how that works with your budget. That's a whole nother step. Maybe I'll go into that next week. Maybe we'll do budgets next week, but.
Read something to you.
Huh?
Johnny Bauer Jr. says good stuff.
JB, that's what's up, JB. I appreciate it. And hey, that's a good segue for next week because next week, Johnny Bowman, I'm sorry, Dr. Johnny Bowman Jr. Is going to be my guest on the show, and we're going to be talking about his new book. And I got an advanced copy sent to me, and I've been reading, and it's outstanding. And you know, we always do a book of the week on the Daily Bread Radio Show because what? Reading is fundamental, number one. Number two, no man or woman will live long enough to know everything that they need to know to be successful. So you have to learn from other people, right? You have to be able to learn, because, you know, if I see Raheem get beat up,
God don't mind.
I'm gonna help. I'm gonna help. Depending on how. Let me preface that by saying I'm gonna help.
If it's Debo.
No, depending on if I think I can help. But if it's Debo, or if they got a pistol, or if you already getting them, then you don't need me.
Yeah, no, you don't have to.
Right? You know, okay. So, but just say if I see you getting it, then I don't have to go and insert myself and get it too. I can just learn from you. I can just watch and say,
oh, that's
I
a
don't
good
need
hook.
to do that. I may not need to talk to that man like that.
That's
right?
a good hook.
Oh, I don't need to snatch his food and get that. So, Dr. Johnny Bowman Jr., he's written an excellent book. And the title alone is going to tell you that it's an excellent book. Listen to this. From failure to faith to freedom. You could drop the mic on. Just drop the mic. From failure to faith to freedom. That just, ow! Listen, I got the book. Look, I took the book out of the mail.
Read the title again.
From failure to faith to freedom. That's it. That's all you need to know. When somebody asks you what's the book about, don't worry about from failure to faith to freedom. Just the title alone to tell you it's some good stuff. But let me tell you how this went. I took the book out of the mail, started reading immediately, right? And when I say immediately, I started reading it as soon as I took it out of the mail, right? I started reading it, and I only had the book 2 days, 3, what's the day, Thursday? I had the book like Tuesday, right? I'm halfway through reading it. My wife halfway through reading it. And my daughter is starting to read it in 2 days. Is the book good? You didn't hear what I said. I'm halfway through reading it. My wife is halfway through reading it. And this is one book. Now, we ain't have multiple copies. So this is one book. As soon as I put it down, my wife picked it up. As soon as she put it down, my daughter came over. I said, hey, I got a great book for you. You need to read this. She's 24, right? It's an excellent book. You can learn from other. The message in this book is so deep. I've only read half of it, and I'm already like, God, this is. So JB, I call him JB because we grew up together. We both from where? Duval. You better get used to that, man.
Tell JB, I said, don't comment on the Steelers. Tell me, come on, them Steelers.
The Steelers, you don't comment on them. Why not? Y'all ain't won no game.
Tell JB leave.
Y'all ain't won no game. What you want us to say? Y'all ain't won a game. What you want me to say?
Tell JB leave the Steelers.
Le'Veon Bell need his money. Now, look, Now, and I don't want to digress, but we need to send it. We need JB. We need to get some of these books. You need to sign them. We need to reach out to Mike Tomlin.
Yeah.
Right.
Yeah.
We need to get. We need to get 53 copies up to the Steelers from failure to faith to freedom. We need to send them some copies of the book, man. Right, that's 53 copies. You can 54, because the owner definitely need a copy. Because how you not pay Le'Veon Bell and he 60? Just that's why I say you gotta learn numbers. If they put up a chart and say Le'Veon Bell is accountable for 60% of your offense, 6-0. You just gave AB what, 19 million, 20 million, close to $20 million. I said Le'Veon Bell is responsible for 60% of your offense, and you're not gonna pay him? How smart can you be? Now, trying to save money, it's a lesson in that. That's why you have to look and learn from everything. It's a lesson in it. You know what the lesson is in this?
What's the lesson in that?
And I talked about this last week. You remember this? When that monkey
The monkey
put his hand in that coconut and grabbed them peanuts, and he can't pull his hand out that hole and he refused to let that go, that's the Steelers' ownership.
God almighty.
They trying to save money, guess what? And they done spent $14 million because they done lost a game, right? They lost a game. They tied a game that they should have won both of those. So guess what? When they go on the road, you think people gonna be breaking? You think they're gonna be going to see them? No. They no. No. Okay.
I mean, we,
all right. Okay.
We had 2 losing seasons in this.
What year was that? What year was that?
Go back about 87.
87. You remember something from 87. I remember a lot of stuff. Guess what happened in 87 to me?
What happened?
Everything. I was young. I was running around. I'm good. 87.
Y'all won the Super Bowl?
80. Who?
Or y'all weren't even a team then?
See, there you go. There you go. Now, see, that's what, see, it's a lesson in this. I want y'all to listen to this. There's a lesson in this. This is what happened when you talk to people that talk to you about what they did in 1987. Right? They tell you all what they did. Man, I was the man in 87. Man, I was the 87. It's 2018. Don't nobody want to hear no about no. Bro, I don't want to hear about no 87. What you did this year?
Listen.
What you did this year? You gonna go home and tell your wife that, hey baby, I took you out to dinner. When last time you take me out to dinner? I took you out to dinner in 1987. Like,
you still fool?
Did you get what you wanted? 1985. We done with 87, man. We done. But hey, next week JB's gonna be on. Dr. JB is gonna be able to talk about his book, and I'm very excited about that. I know we get to the top of the hour, but a couple of things. This game, cash flow. I talked about it last week. It's about a $60 investment, right? But it's 10 times better than Monopoly. And the reason I say it's 10 times better than Monopoly, this talks about the way you need to think about real life finances. Real life. The objective of the game is 2 objectives. The first objective is to get out of the rat race. Literally, it's a circle in the middle of the board, and that's where you start off. Everybody starts off in the rat race. The way you get out of the rat race is you get out of the rat race once you've accumulated enough assets and you have passive, listen to this, you have more passive, I didn't just say income, I said passive. What is passive? Passive means whether you eat, sleep, come, don't come, go to Bangkok, don't go to Bangkok, whatever you do, every month you got this money coming in. So that's rent, that's dividend, whatever you got, it's passive. It doesn't need you to be involved with it for it to just keep coming, right? You might have to go collect it sometimes, but it's gonna keep coming. When you're the first objective to get out the rat race is this. The only way you can get out the rat race is to have your passive income exceed your expenses. This is a game, but think about real life. Think about right now, if you wrote down all of your expenses and you woke up in the morning and you had passive income, right? Say all your expenses is $2,000 a month. and you woke up tomorrow morning and you had $2,500 of passive income coming in, you good. People talk about you need $2 million to retire. A lot of these, pundits, a lot of these researchers, you're not gonna be able to retire unless you have at least $2 million. That's not. If you get your expenses down to a minimal level, meaning just your, utility, maybe a, small house note or car note, if you get them down far enough, and then you increase your passive income to exceed your expenses, you can go and do whatever you want to do. You can go and do whatever you want to do. Why? Because you got your expenses covered. You ain't worried about nothing. What you worried about? Oh, the plant closing. So I don't care. I'm good. I'm good. What else you gonna spend? Oh, I want to travel. Okay, travel. Do whatever you want, because your expenses are covered. Well, you will need more passive income if you keep buying car notes and put them onto your expenses, right? So now instead of you needing 2,000, you need 25. Okay, you need some more. Okay, you need some more passive income, and you don't need $2 million every month coming in to do that. You could do that for most people. I would venture to say, if you had $6,000 of passive income, I didn't say 2 million, $6,000 of passive income coming in every month like clockwork, most people will be good for the rest of their life. Good. With the same money that you make right now, you would be good. I don't care how much you make right now. You'd be pretty good, right? You'd be pretty good. So that's the first objective. Get out the rat race by creating passive income that exceeds your expenses. That's the first objective. Now, when you get out of the rat race and you get into the outer circle, it's called a fast track. When you get on the fast track, the objective to win the whole game is this. On the fast track, there's two types of places that you can land on, right? One color is pink. Those are all of your dreams. So they have stuff on there like you buying a ski lodge in Aspen, Colorado. You going on a world tour for 3 months. They have all of these. You're going to open up an orphanage in Africa. You're going to donate $10 million to your favorite charity. All of those are dreams. So they have the dreams, and next to the dreams are business opportunities. In order for you to win the total game, you either have to land on a dream and have enough money to activate the dream, meaning you're going to donate $1 million. If you have $1 million in income, when you land on that, then you won the game. But if you don't, you have to keep going. If you land on a business, and the business says you're going to have, it's cost you $300,000 to purchase this line or this string of cleaners, but you're going to cash flow $25,000 a month, right? If you got the 300, you can get the cleaners, and the cleaners is going to have you $25,000, but you have to generate $50 additional $1,000 of income, cash flow every month in order to win the game. I didn't say 8, 10, and most of the places are like $10,000 of cash flow, 5, 8. So that means you have to accumulate a series of businesses, or they have a couple of spots where you can land right on it. Oh, you can, you get $75,000 in cash flow, but you got to have $1 million to activate that. So just those two concepts. What does that say about real life tomorrow when we get paid tomorrow? That says that when I get paid tomorrow, one, I need to have an income statement. I need to understand my balance sheet. I need to understand how my assets are going to create income that's going to increase my cash flow. I need to understand I'm going to need a certain amount of money to purchase certain assets that's going to give me the cash flow in order for me to have the cash flow to exceed my expenses, so that I'm good. So that you're going out. So now you're looking at things like, I'm going to buy cleaners, I'm going to buy Zaxby's, I'm going to buy McDonald's, I'm going to buy a travel agency, I'm going to invest in a franchise, I'm going to get me a Jimmy John's, I'm going to get me a Domino's, I'm going to get me a car wash, and not know I'm going to buy a car, I'm going to buy some jewels, I'm going to get a Rolex, all that'll come. Because when you cash flowing and you want to buy a Rolex, buy it. Because you can't, all your stuff, you good. Not fighting. I'm going to got her $500, killing each other with $500, $600. final expenses not covered, no life insurance. Just like we gotta change the paradigm. We gotta change it. It's 2018, man. 2018. So excellent show, and I'm gonna give you a couple more books y'all need to go and pick up. I talked about these last week as well, but I'm gonna say it again. Seeing the Big Picture by Kevin Kopp. This is a very, very good book, and it talks about income statements, balance sheets in a business. It talks about profits, losses, and how to manage a business. And it's a simple read. I mean, it's about a guy that owns a bicycle shop, and he talks about opening the shop, running the shop, maintaining it, and getting it to the point where you can sell it. Very good. It's called Seeing the Big Picture by Kevin Kopp, C-O-P-E. Definitely pick up a copy of this. The other book is Financial Intelligence. This is a book that's for, I guess you would say, people that are non-business inclined, or people, that say, hey, I'm not into, numbers, or I'm not an accountant. You could pick this book up. It's from the Harvard Business Review, and it has 3 authors, Karen Berman, Joe Knight, and John Case. But it's called Financial Intelligence from the Harvard Business Review. That's the publisher. Pick this up. Go to Amazon, spend the $10, invest it. You learn this. Income statements, P&Ls, balance sheets, cash flow analysis, debt analysis, all of that's in this book as well. You want to definitely pick that up. And then the last one for the night is called The Guide to Investing. This is the 3rd installment of the Rich Dad Poor Dad series. But what this book talks about is how do rich people invest the surplus that they have into assets to purchase more assets. And I'm going to leave you all with a famous quote from Ted Turner. Ted Turner is a multi-billionaire, the founder of TBS, right? Supposedly, and I don't know, I'm just going to go about what I read, the largest landowner, area-wise, the largest landowner in the United States, right? Because he's supposed to own like millions of acres of land, like all out in Wyoming and Montana and herds of buffalo and all of this, in addition to the stuff that he's doing with TBS and the Hawks and all his other, assets that he has. Ted Turner. He had a famous quote that he used, and with Ted Turner was saying, the essence of it was, you have to make sure that you understand the difference between assets and liabilities. It's critical. And that was basically, I don't want to paraphrase the quote because I'm going to mess it up right now, but I'll get it to you when it comes back to him having a moment here. But in essence, that's what he was saying. If you never get to the point where you understand that, then it's not going to happen for you. It's just not going to add up for you. So that's why I come on every week, 8 to 9, not going to cease. This is episode 70. This is episode 70. We said we're going to do 1,000 shows, so now look, we only need 930. 930, we good. We hey, like we say, like the young people say, we Gucci. Once we get, 930 more shows, that's where we're going to be off in the future. We're going to keep, serving and giving out this information. And I want you all to take advantage of it. I want you to take advantage of this because I promise you, I'm not just telling you all this, I'm doing it myself as well. Debt elimination, income statement, balance sheet, looking at some different assets that I could buy. Me and my wife talking about strategizing on different things, like we need to get this business, that business. Hey, that's the name of the game. And I'm gonna leave you all with one more tip. One more tip. Look at the things that you already pay for, activity-wise, and invest in that. Or buy a business in that space. I'm giving y'all this is a secret. This is like a lot of people say, it's not good to have secrets, which is true. It is not good to have secrets. But this is a secret. And I'm gonna give you an example. Say you already spend a lot of money doing something. What would somebody spend a lot of money doing? Just say golfing. No, I'm gonna just use travel, right? Say you already spent I'm going on this trip and I like to go off the coast of Mexico and I'm always going on a trip. Okay, if you always going on a trip, here's a thought for you. Me and my wife went to Hawaii a few years ago, and the money that we spent to go to Hawaii, listen to this. This is some legacy type thinking. The money we spent to go to Hawaii, excellent trip, celebrating our 25th anniversary, had a phenomenal trip, mind blowing, right? The money we spent to go on the trip to Hawaii, we could have purchased, and this is something me and my wife had discussed, and we looked at it and was like, wow. We could have purchased a travel franchise. And I ain't talking about I know some people got the little, multi-level marketing. I'm not talking about the multi-level marketing ones. I'm talking about one that's like a legitimate, you go, you take the test, you get your certifications and all this in travel. You have access to flights and all that. I'm talking about those. We've done the research, so we could have purchased a travel franchise cheaper than it cost us to go to Hawaii. That's number one. So we said, okay, cool. We'll before we go on our next big trip, like a Hawaii, we're gonna purchase a franchise, right? Here's the second thing. When you have a business in the travel industry or any industry, when you have a business and you're doing business with whatever your business is, travel, it could be sports, it could be whatever. So once we buy a franchise, and now when we go back to Hawaii, what are we gonna do? The money that it cost us to go to Hawaii, what are we gonna do with that? The flight, the air, the food, the excursion, the transfers, the rental car, the trips while you own the out. What are we gonna do with that? All of those expenses, where is that gonna land? It's gonna land in a tax deduction in our company because now we own a travel franchise. So that's number two. Number three is this. Now, with a little bit of marketing, a little bit of, hey, y'all going on a trip? Hey, here's my card, just call me. I'll get you a good deal on the trip to South Africa. I'll get you a good deal. Oh, you going to where? Oh, okay. You going, okay. Call me. So now we have the ability to also sell trips to people, family members. Everybody in my family gonna go somewhere. Kids are grown. Got other family members that live all over the country. Oh, we're doing a family reunion. Oh, I'll get you a discount on that air travel. Now you have an asset. People are paying you and you get money. That's an asset. That business is an asset. And you're gonna travel anyway. Because the number one thing that everybody says they're gonna do when they retire is what? Travel. So if you're gonna do it anyway, some people might be in the golf. Some people in the cigars. So I'm like already looking like, man, I like smoking cigars. I like having a nice little conversation and, maybe a cocktail. So I need to look at opening a what? Cigar bar. Just makes sense, right? So things that you already do, things that you're already interested in, look at ways that you can either buy a franchise, start a business, and then that way, the money that you're gonna spend anyway, don't spend the money and let it just go out the window. Spend it and then write it off. Like, oh, this is business related. How is it business related? Cigars? Yeah, I own a cigar bar. So yeah, you need cigars for a cigar bar, right? But we're gonna write it off. That's what you do in 2018, not 87. 87 is gone, don't worry about 87. 2018, 19, and 20.
Oh, Lord.
2017, 18, 19, and 20. And y'all holler at me when y'all win a game. Y'all ain't win no game yet. We'll talk about, and next week when I come on the show, y'all ain't gonna win the game Monday night.
We can win Monday night.
Y'all ain't gonna win Monday night.
Watch what I tell you.
Okay, no, watch what I tell you. And y'all have a beautiful evening. I know we ran over a little bit. Great show, great content. I appreciate all the feedback. JB, I'll see you next week. We'll have you on the show. I'll shoot you out that information, man. Tremendous book. Congratulations on the book.
Got something for you.
Got something for me?
Yeah.
What you got? Go ahead.
Aloha, this is Wally Amos, and you are listening to the Daily Bread Radio. It's the best.
Yeah! That's what's up, boy. That's what's up. And y'all have a great weekend. Have a great weekend. Man, you got much stuff on there, man.
Mm.
That was a banger there.